Hey guys, Mike here. So today we're going to answer all your questions and comments, so feel free to participate as usual. You know, it's one of my favorite videos, so thank you for those who actually submit questions and stuff, and I'll do my best to answer them. And you guys asked some interesting ones. I mean, one asked about starting a YouTube channel, which I'll go into and kind of go on a rant about that one. Also asked about BYD, rate cuts, how it's going to affect the REITs, also small caps, and then the very first one's going to talk about the yield curve, which is a big thing, and the put call ratio. So as usual, let's get right into it, guys. And Ed Moore asked here, I understand that the yield curve is beginning to uninvert, and have you looked at the put call ratio? Well, speaking of the yield curve, yes, it is beginning to, I mean, it's been trying to uninvert, but until it gets above the zero line, that's when you usually don't see things break until then. And so we'll have to see what's going to happen. You can basically just pull this back over here and see on a weekly. We'll pull up the recessions on here. It's an indicator in Trading View. If you have an account, you can pull it up, and it automatically puts the recessions on here for you. It's what we call U.S. recessions, as you can see. And so usually it's when it uninverts, getting above that white line right there, which is the zero line, that it starts to see things, or we start to see things break in the economy. That's going to happen, and it don't happen immediately. But we're so deeply inverted. The question is that zero line really going to mean anything at this point in time, or will stuff break before that or not break at all? That's really the big thing. And if we pull up the Fed funds rate here, you can see also that, remember, it's not them cutting that causes a recession. A lot of people think that. It's not the truth. They tend to just cut too late. By then, things are already starting to break and everything. Because remember how long, if really, you know, the effects of the rate cuts increasing took. Well, imagine if they start cutting, how long some of that takes, because they don't just cut it down to zero, right, unless we're in a recession. So if they go 25 basis points, is that really do anything for the market and you know, the economy? Not really. And so you can see they cut in the recession, but it's not the cuts that cause the recession. Something usually is already broken before then. Now, when you talk about the put call ratio, I will say this. It's funny to me that finally the fear and greed indexes, I put in the morning new brief every morning, which is like sentiment, right? Finally, both go to greed. Finally get synced up again. And then, of course, what happens, we get a sell-off in the large caps. Small caps come rallying back. And, you know, after Thursday, I assume these will both be back in greed again. But talking about the put-call ratio, when it gets really low, and this is on that fear and greed index, and most people love to see, usually the market starts to take some kind of sell-off, whether it's 2, 3, 4, 5, 10%, whatever it is, you'll usually see something like that. And you can see, because people get, you know, too bullish and everything, the sentiment gets way too bullish and out of hand, that's where we're at just basically, what was it, Thursday or Wednesday, excuse me, before that sell-off. And so if you pull this over a chart, I'm finna do one for you. If we look at another put-call ratio, you can see right here the S&P is over it, and you can see when it's way down here, normally you get some kind of pullback. It doesn't have to be big, can be small, can be big, of course, depending on what's going on. But if you go through this, you'll see it multiple times. Same way when it's way higher, right? So people are way too bearish, you normally get a very big rally. Okay, that's kind of how it works. And so when you get to the extremes, anything for that matter, you usually get some kind of reaction from the market. And so, yes, I've looked at both of them. You can see both of them. So we'll see where we're going from here, because it's not like we're going into, you know, the greatest seasonality part going probably mid-August, maybe even beginning of August, we'll have to see. But especially September, October is really where you got to be worried about the market, because it usually definitely, that's when you see most of your pullbacks and stuff. So it could be August, maybe it's going to be September, we'll have to see. Now, next one says, why is BYD stalled out? I live in SC Asia, and BYD cars are absolutely everywhere in Thailand. Hands down the most popular vehicle over the last year. I see NIO quite a bit, and a handful of Teslas. If it's just about being a Chinese company, I don't really get it. And I got to ask you, when you say stalled out, I'm kind of confused on that, because one thing about BYD, I think it always holds it back, is it's OTC in the American market, right? NIO and all them, they're on the NASDAQ and on major exchanges. This is OTC, and a lot of people just don't do OTC. But I don't know what you mean by stalled out, because year to date, you know, or actually from February, excuse me, this thing's at 45%. So it's doing pretty good. You go to NIO here, you know, and go from like April of 2024, this thing is up 27%, but you can see it was going down before that, starting in 2024. So, you know, I don't think BYD stalled out at all. And you're right. I mean, as far as the company, a lot of people, I did a video on this like 2 years ago. It's a heck of a company. It's basically the Chinese Tesla, because I'm going to show you everything they do, which actually I think is their weakness more than anything else. But you can see here, NIO, XPeng, they're on major exchanges, right? And so a lot of retail investors will buy that. A lot of retail investors do not go into OTC and stuff. I think that's one thing that hurts them. I don't know why they're not on a major exchange. Maybe you can let me know in the comments. And so, no, they're not stalled out as far as I can tell. As you can see right there, coming from February up, it's been a pretty good run. Again, Now do they trade like Tesla or anybody else? Nope. And they've held up a lot better than NEO and XPeng and all the rest of them, right? And so when you look, though, when it comes to news, I mean, I don't really see too much in the news. But when you look at BYD, a lot of people know nothing about the company, but they do everything. This is the problem I have with them. I mean, we're talking about buses, those kind of construction equipment trucks. They do the solar panels, the power, same thing Tesla does in a way. And they do the charging stations. But the other thing they do is like they even do railway, which I don't even understand that. But that's why, to me, there's just too many cooks in the kitchen. They need to start trying to like filter this thing down or narrow it down to what they really want to be, but I guess is what they want to be. But they got some cool railway. I mean, there's a reason why China has the most, I believe, electric trains out there, and it's awesome to see. And again, I talked about this 2 years ago and said the exact same thing, honestly. But it's a neat little thing. 10,000 to 30,000 passengers on this thing, and I mean, you see, that's pretty cool, right? I think, not being able to comment like Tesla. What's Tesla do? Tesla does their solar. They do, the energy stuff and their power station. Mostly it's cars, right? They're out there building buses and all, and dump trucks and everything else. So again, that's what works, but it just doesn't trade on a chart like a Tesla does, or even NEO or any of the rest of them. But it's held up. It's held up. But it's been one of those stocks like that for a long time. I guess that's kind of how Warren Buffett likes it. But remember, he was a big investor. I think he's still a big investor in BYD. But it is a very good company, and there's a reason why Elon, I think he even said, if BYD gets in this country and starts, able to get their cars here, it's going to be trouble, right? He knows that. Now, next one says, hey, Mike, do you think MPW will go up if we get an OK on the September rate cut? And how will the Fed buyback affect small caps and fintech? I don't know what buyback you're talking about, but when it comes to, I assume you're talking about medical properties trust, having rate cuts sure can't hurt REITs. I mean, let's be real about that. Here we were sitting at, very low rates for a long time. This thing was surging. And so it's just been going down and down and down since we've had high rates. All the REITs have been suffering. So it certainly can't hurt it. Again, let me know in the comments what you're talking about with the buyback thing. I'm not sure what you're talking about, because they're still rolling off their balance sheet. I'm not sure if that's what you're talking about. But again, could it help? It could help all REITs? Sure, absolutely. That's for sure. I don't know a whole lot about MPW. I don't know if they have major issues or whatever it is. And you can kind of pull this up. I mean, even when they were doing rate hikes starting like 2016 up, MPW wasn't performing that well. It was basically going sideways, right? And then when they started cutting, it just started skyrocketing. So maybe, that's definitely going to be the case. For sure, it can't go anywhere but up from here, it seems like, because it's coming into great support. And again, the REITs have been punished. When it comes to small caps, same thing. Like if we especially if we hit a rate cut, and this is a soft landing environment, which means something isn't broken, the banks aren't going, oh my God, we're in trouble, and they're tightening and all this stuff, then absolutely, all these stocks will probably go up for sure if it's a soft landing narrative. And so that's what you got to keep in mind. Again, you got Tom Lee out there saying money's going to roll in from the money markets into the stock market, and if it is a soft landing, that makes sense, right? It does make sense. But if it's not, and we're going into a recession, then no, that money's not going to roll in. So just something to kind of keep in mind right there. But again, you don't need the rate cut for like these stocks to go up. You just need the anticipation of a rate cut for these stocks to go up. So keep that in mind. Now, next one here says, do you know the situation if brokers go bust? My understanding is that SIPC covers cash balances of customers held with brokers up to a max of 500K investor. For shares, a broker is only custodian, and they are held in the customer/shareholder's name. So you just need to change custodian and are therefore safe. I'm not sure about T-bills, ETFs, or options. Reason for question is that some people say you should have a number of brokerage accounts with no more than 500K, but they seem to include the shareholders and cash. And what he's talking about here, this is not a federal institution or anything. The SIPC is not like the FDIC or anything, but the 500,000 protection includes up to 250,000 protection for cash in your account to buy securities. And I found a video here from Clark Howard about this, so watch this real quick.
How dangerous to keep $1 million in one brokerage account if most of the money is invested in ETFs and treasuries? Would you recommend using two different brokerage firms and investing $500,000 in each just in case one of them goes bankrupt?
So you're talking about SIPC Protection, Securities Investors Protection Corporation, which is not a federal agency. People think that brokerage houses have a protection like banks do with FDIC or credit unions do with NCUA. No, they don't. But when your investments, when your money is fully invested, you do not have a risk. The only risk you would face is if there was internal theft in a brokerage where somebody stole money out of your account. But a failure of a brokerage would not put invested assets at risk. Fantastic, you have $1 million that you have invested. That's great for you, great news for your present and your future. And your money does not face risk from going beyond the typical 500,000 that you hear about with SIPC. And having your money in ETFs means, or you have it in mutual funds or index funds or individual stocks, even in the failure of a brokerage, what happens is your accounts, your holdings are moved to another brokerage firm. And again, the only time that your money is at risk is with flat out theft that would be internal to the brokerage. And so I would not worry about a brokerage failure, meaning your money is at risk.
But to make you sleep well at night, I mean, why not split it up? You know what I'm saying? If that makes you feel better, go for it, you know? So hope that helps out with that one. Now the last one says, hey Mike, since you asked for questions, I was thinking of opening a YouTube channel like yours. Do you make a good living out of this? How many years, months before you saw a good income? And I'll say this, if you start a YouTube channel like this, I would advise you not to do it, okay? Because this one, I'm more in the middle, try not to push my beliefs on people, believe it or not, and let you make your own decision, kind of give you the information. If you're going to do one, you need to choose a side. Don't even matter if you believe in the side, I'm going to be honest with you. You just need to, and the crazier you are, the better it's going to do, okay? That's the way you need to go, all right? I'm just being honest. Again, not financial advice, not life advice, just do what you want to do. But I'm just telling you, so, and it's going to be harder nowadays because plenty of people I know, good people, have tried to start financial channels and pick a side and everything else. It's harder nowadays than it was to start one in 2020, 2021, all that good stuff. I'm just telling you. And so in 2020, it was easy, right? I saw a living out of it, or saw at least income coming in, you know, within the first 3 or 4 months, right? And so I know other people, it depends on if you come up and you have really viral videos. You got to have videos that hit on something. And, you know, that kind of stuff really to make you start booming and to make any kind of money. But you can definitely make a living out of it if you can build it up. I'm just saying it might be harder. And I'll tell you what bothers me more than anything else is the Kim Kardashian effect. Here's what bothered me. Somebody like you will start one, you'll work hard at it. Some like other people I know that started them, they work really hard at it, right? And it just never really grows, even though the content's wonderful. But YouTube doesn't push it out, right? It just doesn't happen that way. It's not how the algorithm works. And this is what the algorithm loves to see right here. This is what drives me nuts.
What's one move in bed that makes a man go crazy every time?
Oh, you gotta give him that huck and spit on that thing. You get me?
And so that girl you just saw, somebody sent this to me, and again, it's the Kim Kardashian effect. It's all about viral videos. That girl right there, who I think she's 21, already dropped out of college before that even happened, right? This happened a couple weeks ago, I believe. And this girl quit her job now, has a management team. I saw her up on stage as a famous country singer just like this past weekend. Like she's selling hats and t-shirts. Guys are literally offering her $500 to $1,000 to spit in a jar. And that girl right there is going to make more money in 1 year than most hard-working Americans or most people who are trying to start a YouTube channel and they're grinding and do it legitimately will make in their entire lifetime. I'm serious. I mean, that's the way the world works. It's the Kim Kardashian effect. That's why always people say think I'm joking. I'm not. Like, you know, these girls who go and shake their butt on TikTok and everything else, they're making millions, brother. I mean, that's just the way it is. And I understand when these kids are talking about, I want to start a YouTube channel or be a TikToker. I mean, my son's friends do it. I'm trying to deter them from it, but it's hard when stuff like that comes out. And they're like, why in the world would I go to college and kill myself going to college and work to put myself through college when I do something stupid like that and, you know, make millions? That's just the way it is. Unfortunately, it's America now. I don't know if that's in every country, but here it is. And it's sad in a way, right? Because it's hard to look at your kids sometimes and say, work hard and do. And it's like, wait a minute, what about these people over here? And it's like, you know, there's not too many people that do that, but yeah, if you hit a viral video, you're good to go. So just advice on it. I mean, that's just unfortunately reality. Let me know what you think down in the comments and stuff. But, you know, yes, if you work hard, hopefully you can build it up. If anything, just make it an alternative income, right? A second form of income coming in. Maybe just put it in your savings and all that good stuff, and you can do that as well. So anyway, hope you guys got something out of it. Please hit the like and subscribe button if you did on the way out, and I'll see you tomorrow to set up the week.